Hello again everyone, I hope you are all doing very well. For today's video I am revisiting one of my favourite so-called meme stocks, that being ContextLogic, or Wish as it is more commonly referred to. So in yesterday's trade, Wish fell back below the $10 mark, and personally I think it is now presenting a great buying opportunity. Now if you have seen my previous videos on the stock, you would know that I'm quite bullish on Wish for the long term and have been slowly accruing it in my portfolio. While the price has been sliding slowly lately, there has been some investing news related to the stock which I think has helped reinforce my current bullish outlook on the stock. So at the risk of looking like a victim of my own confirmation bias, I'm going to look at a few business related articles about Wish, as well as have a little bit of a technical look at what has been going on with the stock price lately, and diving into some parts of their books and highlighting a couple of interesting trends that I'm seeing on their balance sheet. As always, this is not intended as investing advice and is merely a projection of some of my thoughts on the company. Okay, let's get into it.
Shut up and take my money!
Looking at the daily chart for Wish, you can see that my accrued position is relatively small at 57 shares. I would like to grow it further when I can free up some cash in my trading portfolio, hopefully sooner rather than later given the current price levels. Now I have drawn two lines which reflect a bit of a channel which the stock seems to be bouncing between in the most recent months, that being the $7.45 mark and the $15.62 mark. These points represent price points that have loosely defined highs and lows that are showing resistance to being breached. So you can see at a high level over here, here and here represent points where the price turned down, and generally lately along here you have seen the price not fall below that. I know that this is a big gap and I do expect this to narrow further in future trade, but for now it will have to do as a guideline. Looking at both the yellow Bollinger Bands and the RSI indicator, and while I know that this is only the short-term trend, they are both heading towards lower scores, which to me reflects on the idea that we are reaching the bottom of the cycle and will potentially be turning around in price shortly. How high it can go? Well, according to recent trading data, potentially around the $15 mark, which is reflected in both the upper limits of the current channels that I have put on the diagram, as well as the upper limit of the Bollinger Band. Now, just very quickly, I've added the trading volume to the bottom of the chart and taken away the relative strength index. I just want to quickly illustrate the volume that has come around the time Wish earned its badge as a meme stock. So we see these huge columns emerging in volume of trade. As you can see, when the price started to drop after the rally, the enthusiasm in the share dropped away also, as seen in the declining volume of trade. To me, I think this is good in the sense that we can see what the price will settle around during more regular periods of trade, and also makes the price movements less erratic and therefore better for me to target in my accrual day trading. Forgive the limited drawings I put at the top here, but they basically represent December 2018, December 2019, December 2020, the cutoff periods for these extracts from this annual balance sheet. Interestingly, even though the company has only been listed for about 8 months, the company has been around for about 10 years, so there are some financial data from earlier points in time on the company available, which have been added to their books for transparency reasons. I acknowledge that their interim results since December have actually been slightly flat, but what is promising is that there are positive trends in the growth of their equity, as well as tangible book value per share, which is currently around the $1.50 mark. Again, I've had to put in some basic letterings here. What they basically represent are the September 2020, December 2020, and March 2021 marks for this interim balance sheet. While there was flat results in the interim, a positive for Wish is that the amount of liabilities they are holding on their balance sheet has significantly reduced in the interim period. It's almost $300 million less. By having less liabilities, particularly current liabilities, this allows the business to operate with less of a burden in outflows, which only helps to contribute to the company becoming profitable sooner. So for me, there was this hidden gem inside the recent flat financial results, which wasn't as heavily publicized. It is worth noting that this was for the March quarter, and we should be seeing June quarter results being released soon. So that will be very interesting to have a look at when they come out. Now moving on, I've got a few extracts from recent media articles related to Wish stock that I want to go through. So this first one is about some data information that has come out from the Monkey Insider website. Monkey Insider is a great site for tracking the activity of the world's 40 largest hedge funds, therefore makes a good resource for looking at stocks which some of the most successful and important investors in the world are trading in. Hedge fund managers are required to file a publicly available report, a boringly named Form 13F, every quarter. Any investment manager dealing with over $100 million needs to file one of these, and they are publicly available. So this is how Monkey Insider tracks the largest funds and investors' trading activities. And based on that information that has recently come out, we can see that there has been a growing bullish sentiment towards Wish stock. I've included a couple of extracts from a Yahoo Finance article about how Wish has grown in popularity with hedge funds. I will link the full article in the description. This is what some of the key extracts I've added here had to say. At the end of the first quarter, a total of 25 hedge funds tracked by Insider Monkey were bullish on the stock, a change of 4% from the fourth quarter in 2020. Also, the article highlights that even hedge funds are holding bullish call options. It goes on to say, more specifically, JS Capital was the largest shareholder of ContextLogic with a stake worth $131.9 million, reported as of the end of March. Trailing JS Capital was third point, which amassed a stake valued at $59.6 million. Matrix Capital Management, Arlet Management, and Citadel Investment Group were also very fond of the stock. JS Capital allocated the biggest weight to ContextLogic, around 6.82% of its 13F portfolio. Prime Advisors is also relatively very bullish on the stock, setting aside at 2.94% of its 13F equity portfolio. The article also compares hedge fund investing activity in selected similar companies stock. Interestingly, Wish seemed to be more popular with the hedge funds, with the other stocks only averaging being held by 19 funds. However, hedge funds generally held larger average size positions in these stocks, with the average amount being held by the hedge funds 418 million, as opposed to the total held of Wish stock by hedge funds being 297 million. I think it is very promising that many of these investment managers are holding bullish positions in ContextLogic. For me, at least, this reaffirms my position to actively accrue the stock. Another interesting, however this time bearish article that hinted at bullish sentiment lately, also coming from Yahoo Finance, looks at recent activity in the options space. Again, I'll link the article in the description, but just some key points I want to discuss on that further fuel the bullish sentiment that seems to be in the mix for ContextLogic. So there was a lot of activity in $15 calls for 20th of August. They had the highest implied volatility. Implied volatility shows how much movement the market is expecting in the future. So it's kind of like trying to predict the future price. Option traders are pricing in big moves for ContextLogic shares, although ContextLogic still got a poor Zacks ranking, falling in the bottom 24%. And also not looking so good is that there's estimates for the current quarter are a loss of 11 cents per share is being changed to 14 cents, a loss of 14 cents per share. And they think that some of this volatility is because people are trying to capture the decay in the share. The fact that there was popular trading around the $15 call options also makes me think that people are expecting to see a price bump up towards the $15 mark again soon. However, the sentiment around the estimated quarterly earnings does concern me a little. While investors are pricing in a move up to $15, it doesn't necessarily mean it will stay there, but it does give me some comfort knowing that they are expecting another rise in the price. I know I've already highlighted two articles, but you know what they say, the third one is a charm. This article was perhaps a more detailed and balanced take on how ContextLogic is shaping up as a company going forward, and shed light on some aspects of the company that many retail investors may not consider, i.e. that ContextLogic isn't just an online store, but is also developing a number of other revenue streams to further support its platform. However, in the case of ContextLogic, it's not trying to be a smaller version of Amazon. In addition to its core e-commerce app, the company has a growing advertising business. It also uses AI to increase user monetization and is adding new merchants, which we've covered here before. And also, we've talked about this one before too, its growing logistics business. I've got shocking underlining skills. ContextLogic now has multiple revenue streams like Amazon, So it is less reliant on growth in monthly active users. It's got good in growth in revenue per user, which is good, increasing the lifetime value of every customer. 14 analysts covering ContextLogic, and they expect Wish's stock to climb nearly 120% from its current level, which when this was written 2 days ago, the price was $10.40, so you're looking at over $21 per share. But maybe don't bank on the trip to the moon that a lot of short squeezes were hoping for on this stock, which is interesting because the short interest in the stock has actually declined a lot and isn't really making it that prime of a target for a short squeeze anymore. Now, anecdotally, I've actually had friends talk to me about some purchases they made through Wish recently. One bought a small hand chainsaw and was particularly happy with the purchase, and another bought a barbecue area shade. Also, he was very satisfied with that purchase. While this is only anecdotal, it does grow my confidence in the platform that even in my inner circles here in Australia, a country that is not core to ContextLogic's business, there is a sense of positivity towards the company. And just one other micro world indicator, everyone currently holding Wish stock through my trading platform IG Markets is long on the stock. Again, a small sample of total investors, but a good sign nonetheless. So some final thoughts on the stock. The current share price seems like a good buy. In the short term, movement up to $15 seems imminent, based on what options buyers are pricing in, as well as the analysis we saw in the candlestick charts when we applied the Bollinger Bands and RSI movements. Longer term, liabilities have been reduced on the balance sheet, and the business is actually close to breaking even and becoming profitable. And also there's the increasing popularity with hedge funds. So overall, I am bullish on this stock and looking to further accrue going forward. Anyway, that is about all I have for this video, everyone. I hope you found it interesting. If so, I encourage you to give it a like, as this is one of the best ways you can support a small YouTube channel like this one. I also encourage you to subscribe to the channel if you're interested in seeing more videos like this. I aim to do a stock related video pretty much every day. Until next time, may the markets trade in your favor, guys. See ya.